What's up, everybody? Welcome back to my channel, JT Money Trees. My name is Jack. I'm here to help you to grow your own money so that I can live a life with financial independence. There's no better time than right now to get yourself educated in finance and money, how money works, and then utilize this tactic or strategies to build yourself the wealth that you want to have in the futures. So the more you learn, the more money you're gonna make. So take advantage of this time. In today's video, I'm gonna explain the differences between the 15 years versus the 30 years mortgage financing. Be sure you watch the entire video because at the end of it, I'm gonna give you the bonus benefit of the mortgage financing. So if you haven't done so, please hit the like button or subscribe and support my channel. So in terms of mortgage financing, there's some pros and cons between the 15 years versus the 30 years. It depends on your budget, like how much you have in your bank, or how much you have in your saving, or your asset you currently have right now. So the bank want to look at all these in order to determine how much you can get the loan for your mortgage. Here's an example of based on the current rate of the 15 years mortgage financing and 30 years. I got the 15 years is 2.2% interest rate, and the 30 years is 3.0%. The pro of the 15 years is a shorter term because the 15 years versus the 30 years is shorter. And the payoff faster, the 15 years is half of the term of the 30 years. So, obviously it's faster. So the cons of the 15 years is a higher interest rate because, when you look at that number, 2.2 for 15 years and 3.0 for 30 years, that's obviously higher than the 30 years. If you break the 3.0 into half, it's supposed to be 1.5 equal to the 15 years. In this case, is 2.2, a little bit higher than 1.5. So, that's obviously higher interest rate compared with the 30 years. And higher money payment, because, the shorter the term, the more you have to pay in order to pay the whole entire loan compared with the 30 years. And obviously it's harder to get qualified. The more money you have to pay for the loan, the lender or the bank, they require you to have more incomes or higher asset, higher money in your saving account in order to back up those missed payment, or just in case you lost your job or any type of situation that you are not able to pay the loan to the lender or the bank. So that's why they require you more to be qualified for that mortgage financing. For the 30 years, obviously there are some pros and cons as well. The pros of the 30 years is a lower interest rate because I already said it before. If you compare the 15 and 30 year interest rate, is obviously the 30 years is lower. And the lower monthly payment, the longer the term, the less you pay every month, and it's easier to qualify. The 30 years is longer term, so you pay less every month. They require you less on your saving, or that your asset is required less compared with the 15 years. And the cons is take longer for you to pay off the entire loan. So that's a cons. But I wouldn't say this is a con at all. I don't see any cons in the 30 years. And I'm gonna explain that in just a minute. When you apply for the mortgage financing in 30 years, you can lock your interest rate or your monthly payment in place for the entire 30 years period at a certain amount. For example, like $1,000, you can lock that $1,000 you pay every month. It's a constant. You don't have to worry about the money payments increasing. So when you compare with the rent, when you rent an apartment, of the money payment keep increasing every year. I would take that as a pro as well. So it depends on how you look at it. Right now I'm going to talk about the bonus benefit when you applying the mortgage financing in 15 or 30 years. If you haven't done so, please like and subscribe to support my channel. And thank you very much. The number one bonus benefit is the equity, the power of your home equity. After every 5, 10, or maybe 15 years, you are able to refi your current mortgage and withdraw the money so that I can use that money to invest on a second property, or invest on something else bigger. I already did mine in last month or so. Or maybe some people withdraw the money using the equity to doing the major repair on your current home in order to increase the value over time. When I'm talking about the emergency expenses, that means like medical bills or any kind of emergency type of situation that you need to take the money out from your mortgage to support those expenses. I said again, I do not encourage anybody to take out that money from your equity loan to spend on any kind of expense, like buying a new purse or buying a new TV, buying a new car. All those are bad expenses. So I'm going to talk about this topic in a different video. If you take out the equity from your home, you're not only increasing the debt of your current home, you're going to waste a lot of money on those bad expenses. So this is not what my channel is for. This channel is for you to build your wealth or grow your money. And number two of the bonus benefit, this is a really important benefit that a lot of people, they ignore this type of tax deduction as a homeowner. When you take a look at your monthly payment, for example, like you finance the 30 years mortgage, every month you pay toward the monthly payment. It's actually 75% of your monthly payment go toward the interest, and the remaining 25% going toward your principal, which is the loan amount that you owe. At the end of the year, you can file the tax return. You are able to get from 15 to maybe 25% of your interest rate that you paid through your mortgage. You can recoup that and deduct to your income tax, whatever tax you have on that year. So be sure you consult with the tax advisor or the CPA in your local areas to make sure how much you get the tax deduction based on your interest rate that you pay in the previous year through your mortgage. Right now I'm gonna leave you some of my thoughts about mortgage financing, either the 15 or 30 years. I would go with the 30 years because the 30 years is longer compared with the 15 years. I can lock into that payment, the same amount of payment for the whole entire 30 years. I don't have to worry about the rent being increased every year. So that's why I go with the 30 years. And then it's lower my monthly payment, which means I have the extra cash in my pocket in order to invest on something else. I'd rather use that extra money to invest on stocks, gold and silver, and even cryptocurrency. The money that you have in your bank right now is not doing any good for you, because the longer it sit in the bank, the more value you're gonna decrease. And I can take advantage of the tax deduction every single year for the interest I pay toward the mortgage. That's how the law is. So why not just take advantage of the tax deduction every year at the end of the year when you file the tax return? Again, just consult with your CPA or tax advisors for this matter. That's all I got in this video. I hope you learned something new and some tricks about how money works. So plan your trees now and invest your money so that you watch it grow over time. If you want to grow your money, you have to learn how money works. Thank you very much, and I'll see you on the next video.